of stuff to cover today. First of all, Elon says, I think this is probably correct in response to Cole, who said $150,000 invested in Tesla stock right now will most likely make you a millionaire. This would be a roughly 6 or 7 times increase from where we are today. And I think that Elon Musk is probably correct when he says this is probably correct. The question isn't so much if, but when. How long does it take? Of course, Elon could be wrong and I could be wrong too. But I'm betting on the opposite outcome with more than $150. Let's just leave it at that. I saw this clip of Tom Lee appear on X talking Tesla.
Can you raise your hand if you own Tesla? Got it.
So majority?
Yeah. Well, I think Tesla is one of the most important stocks in the market because not only because of what Tesla does. Remember, Tesla is making electric cars and they have a huge advantage. I mean, they completely changed the automotive industry, not just because they made batteries better. It's also because they have expertise in manufacturing. Now, manufacturing for cars is one of the hardest things to do because of the supply chain. So if they can dominate manufacturing of autos, Tesla will dominate whatever industry requires manufacturing in the future. Okay,
This is in fact true and very important. Not only did Tesla completely transform and disrupt the automotive industry, but their expertise in mass manufacturing millions of extremely complicated products more profitably than any other company on the planet making same products is not to be ignored. Now, hypothetically speaking, let's just say that there were another complicated product that maybe even would also require some of the same components. For example, I don't know, electric motors, batteries, an AI computer, optical cameras. Of course, this is all just hypothetical. And let's just say that this hypothetical product that definitely doesn't exist and definitely isn't a humanoid robot likely had future demand in the billions of units produced. And let's just say hypothetically this product that is not a humanoid robot that definitely doesn't exist, so please ignore what I'm saying, were in fact real and a massive fucking opportunity based on what Tom has suggested here in this hypothetical scenario that's totally not talking about the Optimus humanoid robot. I hope I pointed that out again because I want to make sure you guys understand I'm definitely not talking about humanoid robots here. It might then follow that Tesla was likely to win and win big. Of course, this was all hypothetical, so I don't even know why I mentioned that. But this is an important point. If Tesla set their sights on any object at massive scale, electronic or otherwise, that's complicated, they will do extremely well. I mean, the proof is in the pudding. No other company on earth today making electric vehicles in large volumes, although most of them aren't even reaching large volume, are making any money doing so. Tesla is uniquely profitable in producing and selling compelling electric vehicles to consumers. That should give you pause.
That's the way you should think of it, that they have intellectual property that allows them to produce anything that the world makes at a lower cost. Like, for instance, if they decide to make smartphones, I would assume they could actually be one of the most efficient producers of that.
Probably true, although I also strongly hope, and again, hope's not a strategy, that it doesn't come to this. I mean, a Tesla smartphone, yawn. Give me a humanoid robot or a self-driving vehicle, thanks. But Tom's point is valid. Should they choose to do this, they'd probably do pretty well.
They have a huge lead in AI now because of Twitter and their XAI. And with full self-driving, it is strengthening the capabilities of their artificial intelligence. They might even integrate Grok into that. And now they have Optimus Prime and robots. And they are, by a country mile, leading in the US in terms of robots. There was companies like Boston Dynamics that was working on these things a lot earlier, and Tesla has already surpassed them. So if you ask me, Tesla represents a company that knows how to take technology and then turn it into real world products. But they're now at the intersection of everything that's important because Tesla is linked to Starlink and to space and to Neuralink and to the Boring Company, all the things that Elon Musk is doing. And I think that that's the second part of the story, that we know if you look at the last 100 years, the stocks that changed the world were really led by a founder that did see the world differently. So I think Tesla, as long as Elon Musk is involved, is one of the most important companies. So I think it's going to do very well.
So Tom Lee believes Tesla's going to do well and that it's one of the most important companies that he owns, or they own. A decade ago, Tesla was a story about electric vehicles. Today, that is no longer the case, although they are still embarrassing the entire industry. But autonomy, robotics, AI, that's where the massive disruption and unbelievable profits will come from Tesla in the future. That said, it is still quite remarkable to watch Tesla run circles around not just the traditional automotive industry, the legacy automotive industry, but even their so-called competition in the world's most advanced and largest vehicle market in China. Here are the top 20 car sales, specifically in Beijing in the first half of 2025. Do you notice something? Technically, only 14 vehicles on this chart, not the full 20, but there's a cluster. Number 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and 14. All fairly closely clustered, nestled between the place above and below. In other words, it's a pretty tight group, except for the number one selling vehicle, which is towering over everything else. That, of course, is Tesla's Model Y. Now, what's truly remarkable about this is the average selling price on Tesla's Model Y is meaningfully above just about everything else on this list, other than Tesla's Model 3. Tesla also does not have a home team advantage. A foreign company with the best-selling vehicle in Beijing, with an average selling price 2 to 3 times more than most other stuff on this list, and not just being the best-selling vehicle by a tiny margin, but an enormous, embarrassing amount, a big fucking deal. And as I mentioned earlier, I could count on a one-fingered hand the number of companies making a profit selling any vehicles on this list. That would be Tesla. You will occasionally hear people suffering from DMF syndrome today, claiming that the competition has caught up to Tesla, they've exceeded Tesla, there's better companies producing electric vehicles than Tesla, blah, 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 blah. Yet still today, you see shit like this, where Tesla, in BYD's backyard, is outselling them by a massive margin with a vehicle 2 to 3 times higher than the average selling price of some of BYD's vehicles. And Tesla's actually making money doing so. It is still true in 2025 to say that Tesla's so-called competition needs a telescope to see them. Now, to BYD's credit, they are selling a lot of vehicles, including, unfortunately, a lot of trans EVs, aka hybrids, aka fake electric vehicles. We know what's under the hood, buddy. An ICE engine. You ain't fooling anyone. This is a remarkable feat. Of course, BYD has an enormous amount of complexity in their business. But I'm going to repeat this. Tesla's the only company that I'm aware of on the planet today making a profit selling electric vehicles in 2025. Every other company selling electric vehicles is trying to compete with Tesla. And because Tesla's dictating pricing terms in the industry, the amount of value they offer is unmatched. You either match Tesla on price/performance, or you sell a vehicle for half the cost or a third the cost to the consumer, lose a lot of money doing so, and you'll sell some of them, but clearly that's not a sustainable business model. Now, from China to the US, Lucid Motors lost approximately $82,000 for every vehicle they delivered in Q2 2025. Trending in the right direction though, a year prior, $113,000 per vehicle sold. Yikes. But I tell you what, I feel bad for Lucid. Some good engineering, some hardworking, dedicated people who really believe in the mission, but bro, they're so fucked. And I actually think that the PIF, the Saudi Public Investment Fund, being Lucid's sugar daddy, has probably been their biggest curse after all. When you have an infinite cash machine paying your bills, certainly isn't a strong incentive to be extremely resourceful. My prediction is that Lucid will limp along for the better part of a decade, continuing to suck on the teat of the Saudi Investment Fund, and at some point, they're likely to cut their losses. Good thing is, that's one very deep-pocketed sugar daddy. I've been saying from day one, I wish Lucid well. I hope they're successful, but hope is not a strategy, and they're almost certainly completely fucked. Some context, I guess, would be useful. Q2, Lucid produced 3,863 vehicles. Delivered, let's just say most of them. Until Lucid can bridge the gap between a few thousand vehicles and a few 100,000 vehicles per quarter, I don't see how they continue to remain viable as a company. Now, I wish them well. I'm just here to tell you the fucking facts, bro. I don't care if you get butthurt, okay? Odds of Lucid surviving, rounded, equals 0. And now on to the next Tesla. No, the other next Tesla, which is, of course, Rivian. Q2 2025 earnings results. Lost a bit of money. Now expected to lose $2+ billion in 2025. And expecting to deliver 40 to 46,000 vehicles for the full year, not quarter, full year. So again, Rivian doing well, making progress, but a very long way to go before they have a hope of survival. Again, not a hater. I wish them well. Just here to tell you the fucking facts. Rivian's loss per vehicle was a mere $19,300 for the second quarter. One final thing, just jumping back to Lucid. I saw AJ posting this. Lucid losing a mere $855 million in the second quarter on a whopping $259 million of revenue. Everything is fine, nothing to see here. And now Gary Black has some thoughts. Quote, "It becomes clearer every day that Tesla will not be the only car company that masters unsupervised autonomy. It's a repeat of 2020 when I predicted other auto manufacturers would copy Tesla's technology and produce a high-quality EV with comparable battery range and charging speed at a comparable price to Tesla, and Tesla EV share growth would stall." Now, I'll get back to the rest of Gary's posts in a minute, but I don't think this is the flex that Gary thinks it is. Back to Beijing. This is what happens when many other companies have caught up to Tesla, in essence having a comparable vehicle with comparable range for a comparable price. By the way, they're all losing money selling them and Tesla's not. Yeah, this is what the competition having caught up to Tesla in electric vehicles looks like. Tesla's still embarrassing even the local competition in China despite an average selling price dramatically higher and actually making money while all these other companies are losing money selling their comparable vehicles. Bro, they have not caught up. Having caught up, would it be selling a comparable vehicle in terms of specs to consumers for a comparable price, but, wait for it, having a comparable cost to produce a comparable vehicle? Very different things. Hence Rivian losing nearly $20,000 per comparable vehicle sold in the second quarter. Lucid losing about $80,000 per comparable vehicle sold in the second quarter. And then, of course, there's Beijing. And in fairness to Gary, many of these vehicles selling for a fraction of the cost and for large losses. So they're not even being sold for a comparable price and much more affordable. Yet still, who's number one in Beijing? By a massive margin with a huge cost disadvantage and profitable at the same time. So back to the post. We will get Uber 2Q earnings tomorrow morning and an update on the many autonomous providers Uber is partnering with to bring autonomous ride-hailing to Uber's 170 million monthly active users. Tesla stock has underperformed the S&P 500 and Uber for 3 years now. Of course, personally, I'm not particularly concerned in what Tesla stock is doing relative to anything else. I'm much more interested in the business. Why? In the long term, the stock market is a weighing machine. I'm not really interested in the short-term voting component, the sentiment. If Tesla wins autonomy in a big way, I won't be particularly concerned about an extremely short-term, mere 3-year period of, quote, underperformance after all. Tesla's gone flat or worse for 5+ years more than once. So Sawyer Merritt responded to this. The difference is Uber has to partner with others to bring autonomous vehicles to their platform. Tesla's Robotaxi service in Austin costs roughly 50% less per mile than it does on Uber. Whether it stays at that level remains to be seen, but this is all before Tesla's introduced the much less expensive Cybercab, which will drop the cost per mile even further. Sure, there could be various other unsupervised autonomy players, but none will be able to compete with the scale and cost advantages that Tesla has. That sounds familiar. Not being able to compete with Tesla's scale and cost advantage. Now, can somebody just remind me again, we just went over the list of all the companies that have caught up to Tesla in terms of profitably producing electric vehicles at scales. So, let's see. So number one, obviously Tesla. So who was number two? Wait, hang on. Not applicable. What's that mean? Number three, not applicable. Four, not applicable. Five, why not applicable? Oh, that's right. Because literally no one else is even making money selling electric vehicles at the moment besides Tesla. But don't worry, it's not like autonomy's a very complicated problem to solve. In fact, car companies who haven't even figured out how to copy Tesla's alleged electric cars and produce them profitably will certainly have no problems whatsoever solving autonomy, because it's not like that's orders of magnitude more complicated than building products, solving real-world AI. But oh man, this does my head in. Let me sum up my thesis. If Tesla successfully solves autonomy at scale, and if Tesla can produce vehicles today, a fraction the cost of, say, a company like Waymo having to pay somebody else to manufacture a vehicle to cover incentives to operate a Waymo vehicle, by the way, that's true, Tesla has a massive cost advantage just on the hardware. And that's using today's Model Ys that they're selling to consumers. The very same Model Y that's taking a dump over the local competition in Beijing right now. So if Tesla has a massive hardware cost advantage, and again, the hardware cost advantage we're talking about is literally the same hardware that's dominating in Beijing, that Tesla's so-called competition is losing $10, $20, $30, $50, $100,000 a pop per vehicle sold, then Tesla will have a cost advantage per mile to consumers to use their service. And if, according to Gary, Uber will be offering autonomous rides on their platform from companies other than Tesla, I don't think these companies are all in the business of charity, so they're going to be wanting to make some money along the way, right? So is Uber going to take a platform fee, meaning the companies offering services on the Uber platform are going to have even less margin to work with in terms of cost per mile to consumers because Uber's taking a cut? Or is Uber just going to do this out of the goodness of their heart? In short, Tesla's going to have a massive cost advantage per mile for their Robotaxi service, just like today they have a massive cost advantage producing their electric vehicles at scale. And this is not in the domain of hypothesis for their electric vehicles. We know everyone's losing money other than Tesla selling EVs at scale. So from an investment point of view, it doesn't matter if you're offering a product to consumers at a comparable price if you're losing money doing so, because if you're competing with a company offering the comparable product at a comparable price who's actually doing so profitably and you're not, you just have to look into the future to see how this one ends. It boggles the mind that Gary doesn't seem to be willing to say this part out loud. How the fuck will companies trying to compete with Uber and offer rides to consumers, charging a comparable price per mile to Tesla, stay in business over the next decade if Tesla has a massive cost advantage, which they do? If Tesla can put hardware on roads, even today the Model Y costs a mid-$30,000 to make. But the next gen, the Cybercab, they're probably going to be producing these things for like $25,000. If the company's trying to compete with Tesla, it costs them $100,000+ to put comparable hardware on roads. How in the fuck are they going to compete with Tesla on cost per mile? By the way, the answer is they won't. They can't. unless they're willing to sustain catastrophic losses, at which point, why are you even in business? Let me be clear. There will be many other companies offering autonomous rides, many of them utilizing the Uber platform because they can't figure out how to build their own platform. But of those companies, unless they can carve out an extremely narrow niche and charge a massive premium per mile and do a very small number of rides relative to other companies, they simply won't be able to compete with Tesla on cost. Tesla has a massive cost advantage for the hardware, and they're doing everything themselves. They don't need to be paying a platform fee to utilize Uber, etc. And importantly, Tesla has a publicly stated mission of accelerating the world's transition to sustainable energy, meaning it is extremely obvious that Tesla isn't going to try and milk maximum profits on cost per mile, but instead are going to try and aggressively scale their fleet of robotaxis such that they can drive down cost per mile without wait times getting too ridiculous, meaning the cost per mile to use Tesla's robotaxis will decline over time as their fleet of robotaxis scales. Thus, other companies offering the quote-unquote comparable service will have to follow Tesla's price per mile down unless they don't want any more customers. But in doing so, they will face increasingly large losses per mile, at which point you just have to say, wait, why are we doing this? We're just going to lose infinite money. Let's just give up. It's so extremely obvious how this one ends. Now, were it not true that Tesla would drive their cost per mile down as aggressively as possible, the limiting factor being wait times, if Tesla were in fact intent on milking maximum profits per mile and keeping this a relatively niche service, then Gary might have a point. Some of these other companies could potentially operate a service with comparable pricing if Tesla was charging $400 per mile and actually make a profit doing so, but they'd be pretty limited in scale due to their cost per mile, pretty small addressable market. But it's so clear from Tesla's mission statement, the more miles being driven in electric vehicles, the more Tesla has accelerated the world's transition to sustainable energy. So Tesla has an incentive, directly in line with their publicly stated mission, to drive their cost per mile down as fast as possible, so the more miles are driven in electric vehicles and less in internal combustion engine vehicles. And the only factor that's going to stop Tesla driving their cost down per mile extremely quickly are wait times. And the way to solve wait times is to produce enough vehicles to service an area, which, by the way, Tesla's producing roughly 2 million robotaxi-capable vehicles per year today. So, spoiler alert, Tesla's going to make a fuck ton of vehicles, scale their fleet of robotaxis really fast, drive their cost per mile down as fast as they reasonably can without wait times getting ridiculous, and every other company trying to compete with Tesla on cost per mile for robotaxis will be chasing them down with cost per mile, just like today companies producing electric vehicles have been chasing Tesla down with cost per vehicle for comparable specs, and while doing so, losing money. This could not be any more obvious. Or could it? And there's still people that I don't think have quite figured this one out yet. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients. Plus, has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.